you, Chris Mace. Welcome, everybody, back to No One Asked Us. It feels like it's been weeks, but really we only took last week off because of NBA. But today, for episode 24, we have the wonderful Laura K. Shealy, who's Senior Vice President and National Sales Manager at Watermark TPO. Laura spent more than 20 years in the mortgage and real estate world, building high-performing teams, helping reach their potential through mindset and consistency. She is also the author of the best-selling book, The 52 Mindset, and Career Quake, which is her new one, which is also an Amazon bestseller. What I love about Laura is that she blends strategy with heart. She's focused on people as she is performance. Laura, thank you so much. I like how ChatGPT put that in the first person for me. So, there you go.
Like, well, that's really from the heart, Andrew. I mean,
yeah, exactly. Everybody knows ChatGPT writes those. So, it did pretty good. Yeah,
it did great. Yeah.
All right. So two best-selling books. While doing a full-time job, which I real quick, I had to, before we jump into your background, I was asked to write a chapter in the new Rethink Everything You Know series book on mentorship.
Okay.
And that was like the most stressful thing for me, was to write a 2,400 page chapter. So like my hat goes off to you that you not only wrote one book, but two, because it is not friggin' easy. So I can't even imagine.
Hold on. 2,400 pages?
100 words.
I was like, whoa, that's a book.
That's like under the
He's writing the Harry Potter series.
All combined. You're reading like the entire Stephen King series in one shot.
Yeah. And chapter 1. I'm done.
Well, you know what I did? Was I had my wife interview me over Zoom. With a series of questions, and I found that I then took the transcript and I was able to pull together my thoughts much easier, because I just don't like to write.
You're a pretty resourceful boomer, you know that?
I know, I am a very resourceful boomer. All right, Laura, we always joke on the show that like nobody grows up, nobody is a little boy or a little girl going, geez, I really want to get into mortgage. Except for Lindsay Meyer over at EPM, and that's that's because I think like she's like a 4th generation mortgage person or something crazy like that. But so how did you land into the mortgage industry? Like, what is that sort of trajectory looked like?
Well, similar to Lindsay, so I'm a 2nd generation mortgage professional. 3 of my 4 parents, wonderful divorced family in the 90s, are in the mortgage business, or were in the mortgage business. And so I grew up saying mortgage was not the place that I was ever going to be.
Of course.
My mom would get up every morning and put her suits on and put her silk flowers on her lapel and, go out the door with her briefcase. And that seemed terrible. So I actually thought I was going to be in the FBI. I feel like I've told this story a million times, but I was very inspired by Clarice on Silence of the Lambs. And so that was going to be my path. So I graduated from high school, went to college originally for criminology, and then found out that we were going to have our son a little out of order. And so it was more of like, get a job, get insurance, get a life real quick. And so I started as a bank teller, and then realized pretty quickly that there were 2 types of people in the parking lot. The people that were in investments and the ones that were in mortgage were driving better cars. And so I said, investments requires a lot of like licenses and tests, and that seemed complicated. And so being around the mortgage business since I was a kid, I thought there's probably a lot of stuff that I could do down that path. So that's how I started, was just really out of necessity. And then really honed my skill set early on, realizing I'm a public speaker. I'm somebody who can network really well. I can also really, break down a process for efficiency pretty well. And so that was how it kicked off. So you can basically blame my son, who's now 26, because otherwise, who knows where I'd be.
Otherwise, you would be an FBI agent.
That's right.
Never in a million.
You have the name for it.
I never would have thought that I would hear somebody say that like Clarice from Silence of the Lambs was their career inspiration.
Who knew?
I love it. So funny story. Every year at Christmas time, my wife and I watch Silence of the Lambs. It's her Christmas movie.
Yeah. I love it.
When we first started dating, Andrew's losing it. We met in October, and then like December, she flew out to visit, and she's like, "I've never seen Silence of the Lambs." I was like, "Stop everything! That's what we're doing." And so it's every Christmas we watch Silence of the Lambs.
Oh my gosh! Well, you know how on Amazon it gives you the what's coming soon and what's going away. Silence of the Lambs, for whatever reason, is on my feed right now saying going away soon. I'm like, what is wrong with you? This is the worst decision ever by the algorithm. Who wants to not have Silence of the Lambs in their lineup? I don't know. Anyways.
I can't get past who watches Silence of the Lambs at Christmas.
At Christmas.
that says a lot. Okay, so you started at a bank.
Started a independent. I worked for Conseco Finance, like dial-in for loans, refinancing, home improvement credit cards, right? And then my mentor at the time said, I need you to work somewhere 6 months before I can hire you. So I worked 6 months in a day and then transferred over to Countrywide, started as a loan officer there and ran the fun journey of Countrywide. That was a great learning experience.
How close to the end were you there at Countrywide?
So I was at the beginning stages of when they started to realize things were going wrong, I would say. I got out about 2004 or 5. My last one there was one where we were really starting to identify, good markets and bad markets and things that were going well and things that weren't. So, but yeah, very interesting environment to be successful in, but also see things that maybe weren't the best.
Yeah, I started with Clayton on the securitization side in 2004, and you could kind of see Countrywide, particularly in 2005. It was like, okay, I feel like we're going down a really slippery slope at this point in time.
Yeah.
It was,
I always say it was the funnest job I've ever had. I went to places I never imagined a small town girl from Iowa would go. But also, we saw the effects of that. Right. So
it did. You are right, though. It did make a lot of careers. I mean, there's a lot of people who got their career there. Now, is that when you made the leap over to Arch, or was there something between Countrywide and Arch?
Yeah. So I actually ran production then for banks and credit unions for several years until 2016 was when United Guarantee at the time came calling and asked me to move into more of a vendor role with mortgage insurance. And so that was a good opportunity for me to step out of managing direct production and really start to see the more national scale of our business and network and bigger markets and that kind of thing. So when I made that move, it really gave me a totally different perspective because I had to now go in and talk to lenders about how their business were operating across all the landscapes. And so that gave me a ton of understanding of how mortgage was happening in different markets and at different scales and with different levels of technology, because I always say I come from the Mayberry of mortgage, being rooted here in Iowa. We are very traditional in the way that we operate, slow to bring on the technology that other markets do, because our borrowers demand a more traditional experience. And so stepping into that more national awareness definitely helped me to see just how things scale differently and how quickly we can make changes, but also bringing the awareness of how change moves slower in some of the smaller markets helps.
Right. Yeah, no, that makes total sense. So before we jump into Watermark here, I want to go down that rabbit hole a little bit. So we talk a lot about this, the advent of AI and, which has in turn really boosted a lot of automation. Like we talk about this all the time. Like I have people who ask us, and Chris gets this as well, as people will be like, oh, can you build XYZ? And you're like, yeah, and I could have built it 10 years ago. Like if you would just because it's not even really AI, it's more traditional automation. But how do you see, I talk as a Chris Gen Xer.
Okay, boomer.
But like, I don't even want to talk to the DoorDash person, right? Like,
Yeah.
like my wife dodged out of the way of the door the other night when the DoorDash person was coming up onto the porch, right? But PK, interestingly enough, wants more of that human connection,
Sure.
like in his transactions, right?
Yeah.
So with that being said, like all of a sudden we're hearing about this advent of more voice agents. I still want UWM, anyone's listening, I want to see a demo of Mia because I keep hearing how amazing Mia is, but I've yet to see a demo of it. So, and I only say that because the other voice agents I've seen feel a little bit clunky right now.
Right.
But we always talk about the coasts, and I think people think of it when they think of that national term, they think of the coast. But when we think about the Midwest, right, where you and I both are,
yeah,
like, do you see like there being more of a rejection of people who look to try and introduce a lot of this automation and remove the human touch?
Well, I guess the first thing that comes to mind is I think about, when I made the move from being in a job in Iowa to, say, Chicago, when I went into that market, people around me in the industry were like, what are you doing? That seems so scary. Like what if people, there's a crime rate there, or there's all these headlines, right? That seems so scary. And so that really describes some of the mindset sometimes is they're going to be afraid of it first. And then as they see the people that they know going there or using it, or it gets more, regularly used throughout their life, then they slowly open up to it. And so as the technology comes into these spaces, what I find is you really have to have strong, influencers in the sense that, we use the influencer thing with Insta, but really it's a social dynamic, right? You got to have influencers that are showing them this is working for us, especially in credit union environments. It's extremely collaborative. So like if one credit union in town starts using it, everybody will start using it, right? Because they'll just chatter with each other. And so it's more of a grassroots effort, I think, to bring those changes and that technology to their doorstep. But you will still find, I think, also a strong need to protect the individuals and the roles that they are traditionally used to, right? In some cases, we've got operational folks that have been in their roles 30 plus years, board members and executive leadership that, have seen a lot of trends come and go with technology. And so they will, for that reason, I think always have kind of one foot in the traditional environment and one foot in new technologies that are coming forward. And it's really going to be the challenge of all these companies and these relationship managers to try to bridge that gap and get them comfortable with it.
But I think you're right. But the last piece I would say is as you talk about the relationship managers, right? And so, I've always said like if all the human pieces of the mortgage were to go away, the last one would be the LO, in my opinion.
Yeah.
Right?
Yeah.
Because ultimately, at the end of the day, and I assume Iowa is similar to Indiana in the nature of like people here do business with like the people they like, right?
Yes.
Like literally people here will sign up for a mortgage with a credit union that may not be the rate that Rocket will offer them.
Yeah.
Because they know Susie and, they know where Susie lives and where her kids go to school. And that is really like an important thing in those communities. So.
But do you think that's going to last? I mean,
that was going to be my next point. Was I also think, if we bounce around in the generational titles here, I think about my 26-year-old. I don't know that he really cares about Susie. I think he wants to go to his phone and he's going to find the best mortgage that he can at the cheapest price and the person or the way he can do it without interacting with anyone. So it's going to be this transition, I think, both generationally and market to market. Like you said, it'll probably go faster in the coast, but as you move towards the middle, there's going to be, I think, a good percentage of consumers and those actual workers that will be a little bit slower to change.
That's fair. There's also, I mean, I don't know Iowa well enough to make a statement, but like, for instance, we're seeing a population boom where we're at, right? Yeah. So we're seeing, I mean, Fort Wayne can't build homes fast enough.
Yep.
with the influx. And I think a lot of that is again, the coasts have become very expensive. So we're seeing people from Chicago
Yeah.
leaving Chicago and moving to
Exactly.
Fort Wayne, which
Yeah.
sometimes boggles my mind, but then I look at cost of living and
boggles my mind for sure. I'm moving to Fort Wayne.
Stop
Wait
it.
till you see the amount of acres in the house you can get in Fort Wayne, though.
Yeah, Chris, maybe if you would come visit me, then you would know. Like,
and count the teeth too.
Never have. I don't think I've ever had a single friend visit me in Fort Wayne. Go ahead, Chris. Go ahead. It's gotta be a good shot there. Okay. Anyways, moving on. So let's talk. I'd love to talk a little bit about Watermark. So you guys are, a practically brand new entrant into the TPO market, and we're seeing a few, right? We've seen a couple who have incredibly impressive teams that are kind of coming out. Can we talk a little bit about like what Watermark is doing differently? Because one of the things I've noticed of a couple of the new TPOs I've spoken to is they're definitely kind of breaking the mold. And sort of looking at like, okay, how do we do this differently? So do you mind talking a little bit about Watermark and how you guys are sort of approaching the TPO business?
Yeah. So Watermark is an existing retail organization, been there for 20 years, Watermark Capital, based in Irvine, California. And last year, around this time, the group of the founders came together for the TPO division and really was looking at different ways that they could serve the market. And what that was rooted in is the idea that there's a lot of big providers, big box providers in TPO. And in some cases, the relationship or the uniqueness of that particular originator can be lost. And so what I have found in working through many different markets is that there's this segment of originators, a lot of them financial institutions, that want to keep mortgage on the front of the building. They want to keep their sales strategy, but the cost to maintain their operational piece of that is getting more and more expensive. And so what we came together and decided was there might be a way to serve this market in such a way that, we can essentially be most of their back office, and we can tailor the experience from those that really don't even want to maintain an LOS, don't want to maintain a lot of the tech behind it, don't want to have the people, all the way to those that want to have a lot of those things, but are still looking for a competitive product. And then the other angle that we took on it was a real, I think, niche market for us, which is we are partnering with InCenter to facilitate the first of its kind CRA trading platform. So banks need CRA crediting for the markets that they're in. And then we are coupling that with all of the sellers of individual loans to get those loans back to their balance sheets. And so that has been a huge initiative for us, launching just this last month and really getting the awareness out there that at the end of the year, especially, banks are really looking for loans in specific MSAs, and they're willing to pay up for them. And so what we're able to do is bring that seller network to them and say, okay, you need loans in Cook County, Illinois. Well, here's all of the sellers that would have those loans currently in their pipeline, and you can kind of pluck out which ones you need to meet your criteria. And so we're matching those buyers and sellers through the exchange every day and having conversations about how that can benefit that CRA market. So that's really unique to us, having the only offering in the market with it. And then with that, we're able to engage with those lenders about, just kind of how do they want to see TPO differently. We're very rooted in doing things the way the lender wants them or it works for them versus telling them how to do it in our system. And so I think for that reason, we're just a little different. We're not looking to take over the whole space, but we do provide, a little corner over here for those that want to do it a little bit differently.
Yeah, that's brilliant. Are there, I imagine from a technology perspective, kind of starting out, you guys are able to get a little bit more in terms of more cutting edge tech, more automation, up front versus some other organizations who may be, stuck in some more legacy tech from that perspective?
Yeah, I mean, we've got the advantage of, because we've been a capital organization for so long on the retail side, we've seen a lot of things come and go. We know what's worked efficiently to manage those pipelines. And so we're able to utilize that experience and then also look at new options because it's kind of a fresh plate. Now, saying that, we have a ton of demos. We get a ton of vendor reach out, right? So really working through the clutter of that and trying to identify which ones are the best ones for us. I will say, Loanscape was a great experience for us, a great example where there's a lot of different providers out there that we could do with due diligence and looking at our relationship with our clients to get started. And there's a lot of big box ones out there, but we found that because our experience is more unique to the relationship that we're going to have, it's a little bit more simplified. We want it easy to navigate. It was a good match for us.
It's a great product.
Thank you.
Nice work, PK.
Nice plug. The bonuses.
There you go. Yeah.
Bonuses to apply.
Bonus to work. No, sure. Now we just have to get Ask Bob over there. So let's talk about the book.
Yeah.
Tell us, actually, let's do this. Do you mind telling us about the first book, and then let's talk about the newly released book?
Yeah.
So what was kind of the premise behind the first one and where that kind of came from, the inspiration?
So the first book, The 52 Mindset, was really rooted in the first 20 years of how I gained networking skills and understood how to build an audience for any marketing message that you want to deliver, whether you're in the mortgage business, running your own company, or building a team. You've got to understand that you can have the greatest marketing campaign in the world, but if you don't have the right audience to deliver it to, you're going nowhere. So what the 52 Mindset does is really gives you, first of all, a breakdown of how to manage your weekly goals. So I found that I was doing 1,000 different strategies, to-do lists, and all this advice from all the great mortgage leaders about how you could be successful. And it was overwhelming to me. And when I started to break it down and go, okay, what if I just learn one thing a week, or I just meet one new person a week, and broke it down into a weekly goal, that it was much more accomplishable for me. So that started the 52 Mindset. You got 52 weeks a year. What are we going to do with it? And so the 52 Mindset book breaks down what are those activities that you can do each week to gradually grow that network and to grow the awareness of your industry step by step, so that at the end of the year, you've got extraordinary results without having to do 1,000 things all at one time.
That's awesome.
I like that.
So that I'm ordering after this call. I feel like I need that. I feel like I get caught in that issue, right? Of like, yes. I'm doing all of these things and not as more laser focused as I should be.
Well, I just want to ask, like, what made you just start? Okay, were you just like, all right, I'm going to write a book, or did someone tell you to write a book? Like, what does that journey look like? Just being from I do mortgages to I'm going to write a freaking book.
Okay, so it's kind of a funny evolution. So,
all right, Clarice.
When think about it that way. When you're in high school, at least in the Midwest, they give you this opportunity that you can take college classes when you're a senior. And so I took my first English 101 through the community college. And about 3 weeks in, a couple papers in, the professor pulls me aside and and keep in mind, I had written for the school newspaper. I had done pretty well from an English perspective in school. The professor pulls me aside and he's like, hey, I can tell that you're putting a lot of work in here, but I just want to be upfront with you. You're not a writer.
Oof.
And so you're going to pass this class, but I just, want to kind of tame down the enthusiasm a bit. Like you're not ever going to be a writer.
So that was the one chip right there.
But, you'll learn through my history, more and more that somebody tells me I can't do something, guess what's going to happen? So
that'll do it.
So that became the first chip. Right. And then over time, as you're developing materials or educating customers, you're figuring out all these different ways that you're really writing. Right. And so about 15 years into my career, I wrote a white paper for LinkedIn, which was the 52 ideas that you could do for the year. And then I was sitting at an event with Christine Beckwith. I met her for the first time at an event in Chicago. And she asked me, what's your one big goal you think you'll never achieve? And I said, I want to maybe write a book. And I don't even know where that came from in the moment. It just literally came out. And I was like, oh, I didn't know I was harboring that. So then COVID hit. Of course, we all had time. And by September-ish of that year, I was like, all right, well, I mean, what else are we really doing here? So I decided to take a book retreat, and I went and just took my laptop, locked myself in an inn for 4 days with the idea of, let's just see what comes out. And I came home with 26 chapters. So
Wow.
it was like, okay, this is going to be a thing. And then,
Respect.
it just started spiraling from there. And then, of course, I got the book published the following spring 2021, and it took off from there. But it just, I can only say that it was probably rooted in that one time that the guy told me I couldn't get it done. And then it just festered for a while. And I was like, I'm going to figure out how to do this thing.
Well, I'll give you account details after, but I bet you can't deposit money into the account number I'm going to give you.
So what brought on book number 2?
So book number 2 came because so I had this unexpected career transition last fall. I got a wonderful offer basically from a company that said, we need to make some changes in a really positive way. And I was like, could I really take this deal and go do this same job for somebody else? Yes, I could. This would be awesome. And I kind of wanted to write a little bit. So I knew I needed to kind of create some space for that, a little bit of time. Mm-hmm. And I took that offer and realized I was feeling all the same things that someone feels as if they were let go or there was some kind of a negative exit. And so I started exploring that a little bit more and realized that there was this huge community of people out there that had experienced career quakes, unexpected transitions in their career that nobody could have predicted, or they had to make a choice for themselves at any time. And we all went through a similar process of, you receive the impact of that. You're at the epicenter. You start to process what you're going through for the first 24, 48 hours. Then you start to untether from what the organization required of you, or the duties and the tasks that you were doing every day, the routines, the schedules. And then you kind of go through this process of reawakening, and then you find the new place that you're ultimately going to put your talents to. And so realizing that I was in that community voluntarily against a lot of other people that had not gotten to make a positive choice, but were still there.
Right.
And realizing that there was a lot of shame that people were carrying in the idea that their career path had just been ruptured. And so I started writing about it, and I started meeting people from all industries, all different walks of career paths, all different stages, and started identifying these patterns. And so that was really when I decided these stories need to be told. And I decided to put all my efforts into writing the second one. And so I did that last winter and spring, and ultimately released it on October 8th. So, and it went to bestseller within 24 hours. So it seems like a story that resonates with a lot of people.
Well, I think I told you last time we spoke that I was a little bit pissed you didn't write this book back in 2022. Because I could really
It is fascinating, though, how many people, obviously they have to go through the cycle, all right, of that initial hit. Yeah. But the number of people that I have known personally that you talk to them a year later and they say, that was one of the best things that ever happened to me.
Yeah. Yeah. I mean, most of us, we engage with every single day have had some version of a career quake, right? It's not the first thing we put in our resume. A quick Google search will show you the most successful people in the world have all been fired, right? But those changes ultimately transform us into people that we never would have been without it. But we wouldn't have maybe voluntarily taken that leap because we're too scared.
Yeah.
I feel like life has a way of nudging you in the right direction there.
Yes.
Well, yeah. I mean, myself as, and Laura, I think we've talked about this. I spent over 20 years in the secondary market, and I woke up in late 2022, and I was not allowed to work in the secondary. I was literally barred from work.
Yes.
For the company, folks. I didn't do anything illegal. But yeah, so all of a sudden, right at my late 40s, it's like, oh, just kidding. You have to be something different now.
Yes.
And I'm now 3 years later, like I'm thrilled that I, landed where I've landed in the trajectory and everything that's going on. But I mean, you can just ask my wife, like the beginning of 2023 was not pretty.
Yeah. Well, and that's a lot of what we walk through with the book is there's this common experience of, like I would say the first 24 hours, I need no pep talks, right? Like, don't be telling me this is going to turn out. Don't be telling me it's going to be better. I need to be mad. I need to be gritty. I'm going to angry cry and it's going to be really snotty. And just don't think that this is the moment to try to tell me we're going to get back on the track. Right. Mm-hmm. And then you go through this process of, okay, now I got to rebuild my confidence and what's my narrative going to be and where do I want to go? And that in itself is just it's a process for everybody to go through. And some people do it super quick and get right back in the market, and others, it takes a lot of time. But the key is, I think, the awareness that if you don't take that time, you will not be ready for the next role in the best way that you can be. You'll still carry a lot of baggage from the last place or a lot of feelings that you still need to process through to ultimately get yourself into a place where you can retether again to an organization or to the organization that you want to build.
Yeah. I think also, I mean, I'd love to get your take on the networking effect, right? Mm-hmm. When it comes to career change, right? Yeah. So, the reality is we have seen people who have lost jobs as a result of, productivity gains as a result of the advent of AI and more technology solutions, right? Who oftentimes might be having to just completely upend and change their career, right? I mean, I feel like if nothing else, we see this in cycles in the mortgage industry of people who become underwriters and ride the giant wave of making really great money underwriting, and then the market falls out and there's no jobs, and they have to suddenly, completely change careers. And I get a decent number of people who will reach out, who DM me, who want to get on a call, and they're in that situation, right? The green banner situation, if you will.
Yes.
And the number one thing I always tell people, I'm like, if I were you, I would spend 5 hours a day on LinkedIn.
Yep.
I was like, I mean, so what other things, or maybe even diving deeper into that component of networking, would you suggest to those people who suddenly find themselves like, sorry, your industry just doesn't have space for you right now?
Yeah. Well, so the first thing I recommend to anybody is stop thinking you're networking to get a job and start thinking about it like you're networking for connection. Mm-hmm. Because when you're sitting out here on this island and you don't have the email to check or the project to work on, it can feel very alone. And so if you start thinking about networking for connection every day, let's just have a conversation about what you're learning or what you're exploring. No intent to hire me, right? Just want to catch up. Think about all the people that you've lost touch with. This is your opportunity to reconnect, because that also helps build your confidence and your positive energies back up, so that when you do get into a mode of you got to sit for an interview or you got to sit for a recruiting call, you're up there. The other thing that I would say is we oftentimes pigeonhole people based on job title. I got let go as an underwriter, so now I think I only can go be an underwriter. What I encourage people to do during this process is to start thinking about not necessarily the individual tasks that you did for that specific job title, but what were all of the characteristics of the job or the parts of it that you really felt like you excelled at. Maybe it's organizations. Maybe it's leadership of a team. Maybe it's you were really good at working the technology piece of that in order to make the loans efficient. And think about how you can transform those skills into different job titles. I also think this is a really interesting time for you to go and start researching what are all the roles that you kind of have an interest in but never knew if you were qualified for or not. And you'll find that in the details of those job descriptions, it's going to be a great guide to how you get that job. Right. And what are the things that you have to elevate within your own skill set in order to make a shift to a different lane or a different industry? And the last thing I'll say is I think too many people in production undervalue the role of vendor jobs, right? If you're able to be a person that was in production, doing the loans, understanding how to manage production or do the day-to-day tasks. And now you can go into a vendor role and coach and guide others how to do that. That is completely lost sometimes with people that really get stuck with their job title.
That is actually a fantastic point, right? Because it really I mean, again, I come from the mortgage side and ended up in tech, right? And we look at, the value that mortgage professionals bring to the tech side, right? Many of whom, help to consult us and whatnot, makes all the difference in the world. There's no question about it. The thing. Oh, go ahead, Chris.
No, I was going to just say one more thing, which is like, from my perspective, or just being here in San Francisco, I see like so many startups. I think people like I index, and I see my friends also index for, people who can just figure shit out. It's like, you don't have all the answers. I don't think, I mean, we go to these conferences, Andrew, Chris, you guys, I'm sure, talk to other executives in the space. It's like, nobody's got it all figured out. It's like, so everybody's kind of piecing it together. And I think the people who kind of float to the top are the ones who are willing to be, put themselves in uncomfortable spaces and be like the quote unquote, dumbest person in the room, and just be comfortable with that and continue to just put themselves in uncomfortable spaces in that perspective. And so I think the indexing for someone who has the figure it out ability is like a good way to think about it as well. So problem solving.
Everything's figure outable.
There you go.
Well, the last thing I would add on this is I'll never forget, there was this guy on LinkedIn who he had this photo of him, and he was on, those the sailboats they race like the America's Cup in. They're like $100 million boats or whatnot. And he had these photos of him on one of those boats, right? Down in like San Diego or something. And I DM'd him. I was like, hey, if you'd ever be up for getting on a call, here's my Calendly link. And he booked time with me. And I was on the phone with him, and I was like, dude, how did you get on that boat? Like, who do you know? And he goes, I swear to God. He goes, I just asked him. And I was like, what are you talking about? And he goes, I went down to the docks and I asked him if I could ride on their boat. And he goes, the one thing I have found in life is more often than not, people say yes. Most people don't say no. He said, the problem is you don't ask the damn question because you're afraid they're going to say no. And I was like, and that was when I just started finding all the interesting people I could on LinkedIn, and I would DM them. But I wasn't, to your point, I wasn't looking to take anything, right? But these were people who I just genuinely, and I mean, of course, there were some people who ignored me or told me to pound sand, but the vast majority of people said yes. And I think that's another thing for people to kind of take away.
Well, one of the things that is always it's been such a blessing for me, but I don't think it's a unique experience, is whenever the market learns that I'm a free agent or I'm available, my phone rings. And what I find in these times is it's more me interviewing them and understanding what kind of a culture I want to join next than it is them seeking me and hoping, recruiting me in a sense. And so in order to be in that mindset, though, you have to be very clear about what you want to have in a job and in an organization and an experience. And so I'm like you, where, when that time hits and I need to maybe make a shift, I do everything I can to learn what's happening in the market, who's available, what companies are up and coming, which ones are struggling, which ones might need my talents, where I can learn more. Because I just like to constantly engage and understand the evolution of where we are all the time. And so I understand that there's times when there's a lot of people in the market looking for roles. And I think if you can stand out as somebody who just really continues to network for connection in that way, you'll be memorable.
100%.
Lessons learned between being an author of one book to being an author of two. What was the difference there?
I would say the biggest lesson is, two. First of all, You're never more tired of your own voice and your own content than when you're an author. You've read your book 27 times by the time the public sees it. You got to listen to your own audiobook, all the things. So first lesson there is write something you want to talk about for many years to come and that you think is timeless in that regard. Second lesson is, if you're going to take this creative path, be with an organization that fully supports you as a creative person. Because I have been in times when, places will say, we want you to talk about this, but not that. And so as a creative person and a writer, you have to be in spaces that really see you as a whole. And so I'm really thankful now to be in an organization like Watermark that says, we love that every time you talk about your book, you also tell them you're the SVP of Watermark. So that's something to look out for as well.
I love it.
All right. So let's shift gears back or into the technology world.
Yeah.
So obviously we plug Lonescape over there. What are some other things that you're seeing from your side, maybe? And it doesn't have to be necessarily specific companies, but that you're seeing that are newly emerging, that are really helpful, to the TPO world.
So I guess I'll answer this in a different angle. What I'm seeing is a mindset. And I'm not quite sure if it's going to be helpful or not from a vendor perspective, but it's something that I think we need to be aware of. I was just at the NAM conference, the brokers group in Las Vegas, and panel after panel, these top executives from these independent lenders were saying, we know we need AI. We know that, we're working on it. We have it, but you should be demanding it as an originator from your partners. And I thought that was a really important thing for us to pay attention to, because what they are advocating for is that basically the big boxes and all of us as TPO providers should be giving them all of these tools so that they don't have to buy it for themselves. And that to me created a completely different level of the conversation, because on one hand, if I'm an independent originator, I'm thinking, okay, am I now dependent on the vendor space and my partners to provide this back to me? So therefore, do I lose a little bit of control of my own experience or who's ultimately programming it? But then on the flip side, if I'm on the vendor side of that, that's a huge expense and a way for me to be a service provider that maybe I hadn't prepared for. And so I just, I want to open up that conversation, because if these originators are going to expect that it comes from the partners that they have versus buying it themselves, how does that impact the expectation of what we have to deliver on?
Do you think that's being driven by, the UWM strategy? And I mean, obviously we know, Rocket is now getting, at least they're saying that they're all in on brokers. And I sorry for my ignorance on this one, but I assume they'll do the same UWM, tactic of, we'll give you all the tech for free. Do you think that's driving it for everybody else?
I do. I think that what's driving it is, like you said, just that statement alone, we will give you the tech for free. Right. It's going to completely change. Okay, so does that mean that we all in the tech space shift our attention to these bigger providers only and understand that the smaller ones are just going to expect that it comes through them? Or do we keep our sales strategy to encompass all of them? And then if I'm a smaller provider and let's say something goes wrong with big box lender, or it doesn't work the way that I want it to, am I now limited in the experience that I can offer? Again, it was just a big mind shift for me to think, okay, if this is now the expectation of the market, it reminds me of when we shifted from a face-to-face experience to a digital experience with loan applications, right? If people are just thinking this is the way the world is going to spin now, everything that's going to have to align in order to support that.
I have a couple thoughts on that one. I think I'm sure you guys have seen Andy Harris on LinkedIn. He talks quite a bit about like the whole brokers being independent, because ultimately they are their own business.
Yeah.
And I think the technology piece of, or the angle of giving away all these tools and why maybe UWM and Rocket have done that is that, you know, ultimately majority of their business flows through those systems. And not to say that it's impossible to take it out of those systems and go, you know, shop that loan around somewhere else, but you essentially become dependent on those platforms, and then, you know, you send majority of your business to one of those lenders. It's a smart business strategy, but if you're truly being a broker, I think you should be independent of any lender's platform. So I'm kind of surprised that that was the strategy that was being played out. And also, I think from a lender's perspective, like that's a huge burden to kind of like play out. And I think as we were talking about, like that's like a lot of investment that has to go from both the vendor side, but also from the lender side to be able to provide all this technology for free. Because somebody's got to pay for it. There's no free lunch.
But what I find
fascinating, makes them incredibly sticky, right? If everything's dependent on them, but the second it no longer works, right, then the independent is back in the boat of going, okay, do I need to establish this for myself, or am I stuck?
Well, I think so it's funny, PK, when I hear people say that and they talk about brokers being, you know, and with one kind of tech stack, or they kind of send all their loans one place. What's different than a retail branch? Like,
well, that is the question to bring up. It's like, well, are they really being brokers or not? That's a whole separate, I think, can of worms. But on the tech side here, I also think that's like a duplication and like a waste of like resources. If, like, you know, let's say Watermark is investing all this money on providing free software, and then lender ABC over there is also going to do the same thing, trying to attract brokers to use their technology. I think personally, I just think that's a bunch of redundancy and like a lot of money going into, like, you know, trying to win over brokers through free software. But I don't know. I'm personally, I don't think that's the right way to go, unless there was like a platform that kind of was like standardized, which I've talked about before, which is like, what if there was a standardized broker platform that, you know, they could run their business on, but ultimately they're able to send place the loan with whichever wholesale lender they want to.
Right.
I think that could work if there was like a coalition of a wholesale lenders that say, hey, we're going to invest X amount of capital, we're going to commit X amount of capital per year into this coalition or collaboration of, I don't know, 50, 60 wholesale lenders, and we're going to build software that's going to go for brokers. I think that could work, but I think Arrive has tried that, and I'm not sure where they're at, but there's a couple people who have tried this before and are trying it today.
You're expecting the mortgage industry to standardize, so
yeah, I know, that's what I'm saying.
Apparently, you've not been in the mortgage industry long enough, buddy.
I know. Well, every time I've mentioned this idea, I get so much pushback from people. They're like, "No, we're not going to do that, because then if the brokers can send the business to anybody on one platform, then like, where's my moat?" And they want and so then they go into the direction which Laura was talking about. Exactly.
Right. And so, like, now why am I going to send? I'm just going to go to the cheapest bidder, right? And it's just a race. It's just a race to the bottom, and then everybody gets out of wholesale because there's no point to be in it. The thing I find interesting about that statement around the expectation of the TPOs to give the tech away is I would argue that you actually have an opportunity. I'm going to get in a lot of trouble for what I'm about to say. You have a huge opportunity, I think, as a TPO to grab a lot of the market share away from, I'll just not name names, but you all know who I'm talking about. People who only build their tech internally.
Yes.
Because the reality is, we know that, like, in-house built is typically never as good as single independent vendors, right? So now, as you know, somebody like Watermark, if you were to go down that path, right, it's like you can pick the best of the best in each category from a technology perspective, and now your moat becomes, hey, we offer the best in class tech stack, you know, out there. Is it going to be a little bit more expensive and compress your margins? Absolutely, 100%. There's no question about it, right? But that being said, I think, you know, it'd be interesting conversations with vendors to see, like, I think it's also going to have to change the vendor mindset, right?
Yes.
As well, of where it's like, now we have to understand what the audience is and who we're working for. And we need to be a little bit more mindful of, hey, you know what? We're going to work with the TPO, but we understand their strategy. We need to also take some of that margin compression on ourselves in order to appropriately, partner with the TPO. But long term, you could benefit as a vendor significantly. So maybe you do get margin compression, but you get huge volume gain, right?
I think the challenge that I see in it is, and maybe AI is going to be the big shift here, but as long as I've been in the business, ultimately, at the end of the day, this still comes down to price. They want the most competitive rate offering to whoever they're going to originate or sell that loan to, right? And so as we layer in all of these levels of expectation, provide me with the tech, provide me with the speed, provide me with all the efficiencies, provide me with, right? Then that's just going to compress the price. And so I can't believe that I can run a company with all of those layers and be able to maintain the most competitive price at time. I mean, there's just, it's going to be this ebb and flow of we're in the market and we're not in the market. And so that's why I think customizing your experience, understanding that not everybody wants 27 things on the menu, right? But if they do want all 27 things on the menu, what is that going to look like differently than the guy who only needs one? And so that, to me, it really opened up a lot of questions that I just honestly can't sleep over since I left the conference. Like, not just as a TPO provider, but also thinking about it, as somebody who's led production and going, okay, am I now picking my partners based on the tech that they're providing me, as well as the price on the loan that I'm selling them to, and my secondary strategy, and also my efficiency process and all those pieces. And so it just seemed like a whole nother layer of expectation from a vendor perspective that I don't know that we're prepared to deliver on quite yet.
Right. No, that makes total sense. How was the conference overall? I wasn't at that. I was at MBA Annual, which obviously kind of almost overlapped one another in Vegas. But what was the mood?
Super high energy, like any broker environment. They're ready to conquer the world. I personally love that kind of energy at those events. You're never going to meet anyone who's more entrepreneurial mindset than an independent, right? And so they want to take it all in. They want to learn all the things. What I love too about going to an event like that is everybody's in the vendor space because they're truly hungry to learn what's new and what's changing and engaging in those relationships.
Oh, interesting.
Differently than others where they're maybe, meeting in lobbies, or they're not really attending sessions, or the vendors are kind of left behind. I think in the broker world, they really do engage well.
Nice.
Interesting. Okay, that's good to know. Now I'll have to make sure that I go to NAM next year.
Yeah.
Because MBA was obviously it was a very similar, very high energy. Everybody felt really positive. I think that's because everybody is convinced that rates are going to go down next year.
Yeah.
I don't know if I'm 100% sold on it or not. I've gone through so many years of people being like, it'll be 5 next year, 5. And I'm like, we'll wait and see.
I love how the mortgage industry the rates are only cyclical only whenever things are bad. Whenever things are good, it's like, this is going to last forever.
Right.
Memory is short.
And then when the times are tough, they're like, don't worry, it's cyclical. It'll come back. And that's not a good strategy.
Well, and it's this constant. It comes back to like the constant belief that like rates should be 3, right? And that's like I've always said that like I thought that the American mindset needed to shift more so than the rates needed to come down.
Yeah.
Because we have an entire generation of people who expect that 3-4 rate.
Yeah.
Right? And that we may never see that again.
Yeah. Well, I tell people in my everyday walk of life that are not in this industry, and they ask me, of course, at every barbecue and, every baby shower, what are rates going to do? Right. And I have to remind them, the fundamentals of banking are you cannot get a mortgage at 3% and expect your CD is also paying at 4%. I mean, this
Right.
does not work, right? You have to have at least a break even, and most banks need to run at a margin, right? So it doesn't matter if you're an independent or a credit union, or, it's all in the same model that you cannot borrow money cheaper than what we're paying for people to deposit it at. And
Right.
so the second that we get out of balance in that, it should not be, I mean, we should all go to refinance, sure, but you should also be very aware that this is a bad sign for your economy. So it's, I think it's just, you're right. The American public has to definitely understand what the norm is, where we should live in a comfortable space for rates for everything else to flow appropriately. But nobody's going to forget it. It's going to take a long, long time to get the idea of even the 2.5s.
Well, and again, home prices going up, and I know I'm not saying anything unique, but like I had lunch with a buddy last week, and him and his wife are empty nesters now,
Yeah.
And they've got a 4,000 square foot home, and he was like, "Dude, if I sell this house tomorrow and go friggin' buy a condo, my payment will be higher
Right.
than it is for the 4,000
Absolutely.
home."
Yeah.
So he's like, "Why would I sell? It makes absolutely no sense." So I think you're potentially gonna see a generation of people who are just like, I'm not, unless they're moving, right?
Yeah.
From the city.
Yeah.
But if they're remaining in the same city, it's like, why on earth would I sell this home? It just doesn't.
Yeah, I think you are. The other thing that I see as a big wave that we're going to have to address is this younger generation of buyers are not fixer-uppers. So we've got a bunch of properties that are going to need to figure out how are they going to put the new kitchens in and the new flooring and all of that stuff in order for them to roll over, or they're not going to get the price that they want. And so that idea of turnkey is completely different for, my son's generation walking in. And so how we're going to transition these houses into what they expect to see is also a real business opportunity for somebody.
Which explains why the RTL market has picked up so significantly in the last several years. That makes a lot of sense.
What is RTL?
Do we know? Oh, sorry, fix and flip loans.
Fix and flip.
What is it? Residential transition loan, I think, is what it stands for.
Short-term financing is the way I see it.
Yeah. I just wanted to sound fancy, Chris.
Hey, I'm the kind of guy that'll ask on a podcast, what does something mean if I don't know?
I love it.
I appreciate you asking it.
I always tell people I'm the penny in the room, like Big Bang Theory. I'm like, wait, what does that mean?
Yeah.
People don't talk like that, right? No, say it in a way that real people understand.
I love that.
PK, do we know who the guest is next week yet?
No.
Okay.
Nothing for, right? We don't have that one.
Yeah. Normally
we have you ask the next guest question, Laura.
Oh.
But we don't know who that is, so we can't.
We don't know who next week is. We have the rest of November and December, I think, booked out, but for some reason, November 4th fell through the cracks.
Okay, so no matter who it is, here's a good question. Let's assume maybe they've written a book before, but if they were gonna write a book, what would the topic be?
I love it.
Oh, that's a good. I like that question.
I like it. Maybe you might inspire them to write a book.
Maybe it's some fairy tale romance that they've been just dying to get on paper. Who knows? But it's an interesting question to ask.
It is. It is a good one. After writing the one chapter, I'm like, maybe I could do it.
See? You got the bug.
Maybe. Well, again, the audio transcription thing was for me like a huge game changer. So shout out Granola AI, which is my favorite AI tool, quite frankly. Laura, thank you so much. I really appreciate it.
Thank you, gentlemen. This has been so fun.
I know you're a very busy woman. So everybody out there, if you're looking for a TPO, give Watermark a call and go buy both of Laura's books. I'm going to. So, all right. Until next week. And we'll find out who the guest is at some point for next week. So, all right. Thanks, everybody.